Do you want to buy a home, but you don't have enough money for a down payment? Or maybe you have money in your savings, but you don't want to deplete it. I'm going to teach you how to buy a home with little to no money down. And in this video, I'm going to discuss zero money down options, low money down options, and as a bonus at the end, I'm going to discuss down payment assistance programs. So we have three types of zero down loans that we're going to discuss. We have VA loans, USDA loans, and then 0% down loans through private lenders.
So for the 0% down loan options, we're going to discuss the eligibility requirements, the stipulations that come with these loans, and the credit score requirements that are required with these loans, along with the key features with these loans.
First up, for your zero down loan option, we have VA loans. And VA loans are backed by the Department of Veteran Affairs. So the eligibility requirements are obviously you have to be a veteran or active duty member, but also surviving spouses of a veteran qualify for VA loans.
One stipulation with this loan is that there's a funding fee if you decide to go the 0% down route, or if you put a down payment lower than 20%. Also, the home has to be owner occupied, which means you have to live in the house. And that's going to be a requirement for all three of these loan options. For the credit score requirement, it's up to the discretion of your lender, but you could see them go as low as 500. So one key feature with this loan is that there's no down payment, and that's going to be a feature for all of these loans. But this loan, you can also get better interest rates, and there's no mortgage insurance, which I failed to write down. Lastly, all VA loans are assumable. I'm not going to dive into what an assumable loan is in this video. I'll save that for a future video.
Next up, you have USDA loans. And USDA loans are through the United States Department of Agriculture. Now, your eligibility requirements on this one is going to depend on where you live. And USDA loans are only available to people that live in USDA zones, which are typically rural areas.
Aside from being owner occupied, this loan will require mortgage insurance. And you'll have mortgage insurance on any government-backed loan besides VA loans that you don't put 20% down on.
And then you also must have a minimum credit score of 620.
So if you're lucky enough to live in a USDA zone, there's some really nice things about these loans. So key features would be that there are flexible income guidelines and there are assistant programs to help you pay your mortgage if you're low income.
Now, there are 0% down loan options through private lenders. And one, for example, would be Navy Federal Credit Union. Another would be like a local community bank.
When it comes to private lenders, your eligibility, stipulations, credit score, and features are really going to vary between lenders. One thing to think about with private lender loans is that these loans aren't backed by the federal government, and these lending institutions are taking on all of the risk on their own. So they're going to require better credit scores, higher income, and they're going to charge you higher interest rates and loan fees. As far as credit requirements, it's going to vary by lender, but you're looking at 700 plus just to be on the safe side. And then these loans also may be limited to certain areas. For instance, in my local community, there's a community bank that will only lend to people buying homes in certain counties. I'm going to leave this up here for a second for you to take a picture of or screenshot to save for later.
Now, when it comes to buying a home, you don't just have to come up with a down payment. There are closing costs that you need to budget for. But I have a solution for you. And I'm going to go over that strategy after the low down payment options. So hang in there. Next up are your low down payment options.
We're going to discuss FHA loans, Fannie Mae loans, and Freddie Mac loans. Understand that there are other low down payment options out there, but these are the three that we're going to touch on in this video. Just like the no down payment options, we're going to go over the eligibility requirements. We're also going to touch on the stipulations of these loans, along with the credit requirements and the features of these loans, but we're also going to touch base on how much of a down payment you need to put down.
So first up, you have FHA loans. And a lot of people get FHA confused with first-time home buyer. FHA stands for Federal Housing Administration. And you don't have to be a first-time home buyer to buy a home with an FHA loan.
The stipulation with this type of loan is that it's going to come with mortgage insurance, just like the USDA loan before. You can get an FHA loan with as low as a 500 credit score, but it will affect your down payment, and you'll see that here soon. The beauty about an FHA loan is that there isn't any income restrictions on this type of loan. You can have a higher debt to income ratio, and in some cases, you can get a better interest rate. Now, when it comes to the down payment percentage, a 3.5% down payment, you're going to need to have 580 credit score or better. And then if you're as low as a 500 credit score, you're going to need to put at least 10% down on the loan. Next, you have the HomeReady loan by Fannie Mae. With this type of loan, your income can't exceed 80% of the median income in your area. The main stipulation with this type of loan is that you need to complete a home ownership course in order to get the loan. You will need to have a minimum of a 620 credit score, and keep in mind that the higher your credit score, typically the better interest rate you'll get. The key feature here is that you'll have a lower mortgage insurance on this type of loan. For your down payment, you're looking at 3% minimum. Onto Freddie Mac's Home Possible mortgage, you're going to see a lot of similarities between the Freddie Mac loan and the Fannie Mae loan, one being the eligibility requirement. Also, you'll need to complete a home ownership course, just like the Fannie Mae loan. Now, one thing that you'll find that's different between these two type of loans is that Freddie Mac wants a minimum credit score of 660, which is higher than Fannie Mae's minimum 620 credit score. So just like Fannie Mae, there's a lower mortgage insurance with this type of loan. Also, the minimum down payment is 3%. Just like the last three, I'm going to leave this here for a second for you to take a quick screenshot.
So I mentioned that there are other fees that are associated with buying a home that are separate from a down payment. And it's very important to understand what these fees are, so pay close attention. So aside from the down payment, you have the home inspection fee if you want to have a home inspection. You have the appraisal fee for your appraisal, and you have to pay your homeowner's insurance a year in advance. On top of that, you have your real estate agent fees that you're responsible for. Now, some of these fees you can negotiate for the seller to pay, and oftentimes the sellers are willing to pay these fees. First being the real estate agent fees, negotiated between you and your real estate agent. You're able to negotiate the seller to pay this fee, and in most instances, they're willing to pay that fee already. Now, you have your closing costs that are associated with the loan and your title fees. So these costs can cost anywhere from 3 to 6% of the purchase price. And this is a reason why it's very important to shop around your lenders. That way you can find the best deal possible and keep those costs lower. And I linked a video down in the description below with advice on how to avoid common home loan pitfalls. So check that out. So this cost can also be negotiated for the seller to pay. And depending on the loan type will determine how much the seller is allowed to pay. So for example, FHA and USDA allow the seller to pay up to 6% of the purchase price towards your closing costs. And the VA allows 4%. And then if you get a conventional loan, they allow 3%. So I told you if you stuck around until the end of the video, I would go over a bonus. So it's a good idea to check into down payment assistance programs, especially if you're going to go the route of getting the loan type that requires a down payment. Now, I'm not going to dive too deep into this topic in this video because this could be a whole video on its own. But here's a basic rundown. You can find down payment assistance programs at the federal, state, and local level. And typically they come in the form of a grant and can be forgiven after you live in a home for so long. It's important to know the stipulations on those grants because if it is a forgivable one and you turn around and sell the home within that time frame, you may be responsible for coming up with that money. So here are my top 4 sources for finding out about these grant programs. And the first would be Google. Do a quick Google search and see what media outlets locally are covering any sort of local grant programs. And then another source would be the state website, going through their search bar and seeing if the state has any down payment assistance programs. The third would be a local real estate agent that you trust and is very knowledgeable. Maybe ideally someone who works with first-time home buyers often because they're always finding creative ways to help people buy homes. And the fourth would be a local lender or a trusted loan officer who's aware of different programs. So here in my home state, Ohio, we have OFA, which is the Ohio Housing Financing Agency, and they have down payment and closing cost assistant programs. And then on the local level here in my local market, Youngstown, Ohio, if you're buying a home in Youngstown City, they have programs available for first-time home buyers. If you want to learn more about down payment assistance programs here in Ohio, check out this video. Click or tap the link above. I hope you enjoyed this video, and I'll see you at the next one.